I do believe we are going to see higher levels of inflation, but it's not because of tariffs. We are going to get higher degrees of inflation over the next, call it 6 to 9 months, because they are going to print money. They're going to cut interest rates and they're going to print money. That we are going to see from our 120-ish thousand mark today, we're going to run in to the end of Q3, September. Why is September? When we get close to the end of September, you're going to have the options expirations all start to happen. There will be some volatility and likely potential downside pressure. Once we get, 7 to 10 days past that period, I could easily see mid-October, up only, baby, Q4, into November and maybe December, and here we go.
Pompliano kicks things off by challenging a narrative many experts have been clinging to, that tariffs are inflationary. According to him, and supported by recent data, tariffs are actually deflationary. Why? Because the market absorbs them differently than textbook economists expect.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Higher, much higher, much higher. You know why higher?
Why?
Because every single thing that people continue to say is working against Bitcoin, it'll pass with time. Let me give you a couple of examples. First, inflation's been lower because tariffs are deflationary, not inflationary. People are now starting to realize that. Remember when they were telling us the recession, the Great Depression, the empty shelves, the world was going to end, people would stop trading with the United States, consumers were going to be all broke, all that nonsense. Throw it out the door. Wrong. So now enthusiasm has come back in the market. We're back at all-time highs of stocks, Bitcoin, gold, etc. Now, I do believe we are going to see higher levels of inflation, but it's not because of tariffs. So if you go and you look, I recently saw our friends over at Wasteland Capital, what an incredible name. They did an analysis. All the things that are driving inflation don't have tariffs associated with them. For example, shelter. Nobody is tariffing your house. Used cars. No one is tariffing your used car. So you go through these things, that's what's driving inflation. The things that are being tariffed are actually going down in price, as predicted. If you remember a couple of months ago when I went through steel, solar panels, washer machines, 2018 tariffs, I told you the prices are going down on these things, not up. I mean, I'm not going to say it, but you could say he told you so. Now, what does that have to do with Bitcoin? Once people realized the tariffs aren't this big boogeyman that they thought it was going to be, people started to pile their capital back into the market. And so now you see stocks up, Bitcoin up, gold up, etc. Now people will yell and scream like, oh, he didn't do 150% tariff against China. Oh, he didn't do a 57% tariff, whatever. There's still very large tariffs. There's a 10% blanket tariff on all US imports. That is a real tariff. Look at the tariff revenue. We're breaking tariff revenue records every month. And so I think that the thing that now is going to happen with Bitcoin is everyone's starting to say, wait a second here. There's a lot of manipulation going on in the traditional financial system. And so I need to find something that is going to actually perform. That's why I see Bitcoin and gold both going up. Now, why do I say that inflation is going to come? It's not because of the tariffs. We are going to get higher degrees of inflation over the next, call it 6 to 9 months, because they are going to print money. They're going to cut interest rates and they're going to print money. Now, you can make the argument that we do need that, right? Why? Trueflation, the alternative real-time inflation metric, shows that we are currently sitting at 1.8% as of today. Now, why is 1.8% important? Well, it was at 3% in December. So if you zoom out just 6 months, all the noise, all the chaos, all the doomsday predictions, all the nonsense, we went from 3% inflation down to 1.8%. If we're at 1.8% and unemployment is just over 4%, that tells the Fed, cut rates. Guess what's going to happen? They're going to cut rates later this year. The market's pricing in up to 3 rate cuts. They start to cut rates. They don't know how to cut rates without printing money. They're going to start printing money. And so if you get rate cuts plus printing of money, guess what happens? You're going to see inflation start to tick up. Now, I don't think that inflation is going to go to 5 or 6% like all these people are predicting. I think inflation may go from the 1.8% that is the real-time metric today to maybe goes like 2.2, 2.3. Doesn't sound like that much. but it starts to be 20 to 30% increase from where we are today. So what should that do? Asset prices are going to go up. You're going to see Bitcoin, gold, stocks, everything continue higher in the second half of this year. Now, why else is Bitcoin going up? A lot of people are buying it. And you're now starting to see the ETFs. You're seeing these treasury companies. And you are also now starting to see a bunch of other types of funds. One of the most interesting ones are these real estate Bitcoin funds. So you have Newmark that's come out and said that they're going to have real estate plus Bitcoin. They've got a unique way to think of the Bitcoin as collateral as part of the loans. You have got people like Grant Cardone who are coming out and they have real estate funds that are taking some of the money and they're putting it in Bitcoin. So you're starting to see Bitcoin getting stuffed into every corner of the financial system. And they want to figure out, how do we take this asset that brings new users, new clients, new assets, new revenue, and put it into our traditional products. The last thing I will say is that a lot of the money that has gone into these Bitcoin treasury companies, most of them, the capital has been contingent on closing, which means that people have said, I will give you 100, 500, 700 million dollars, but they have not actually given it to the company yet. So if you go and you take a look at a bunch of these companies, for the most part, the funding is contingent on closing. Guess what's going to happen in the next 60 days? People are going to start closing. Today, reportedly, the Nakamoto deal is going to close. They're going to get access to their capital. What do you think they're going to do? David Bailey's out there tweeting, saying he's going to go buy a lot of Bitcoin, right? What do you think is going to happen in these other deals? So there's a lot of buying demand that is coming. On top of that, what you are going to start to see is that the people who did buy Bitcoin and they were using certain capital, a lot of that capital was hedged, meaning people were going long the stock and they were short spot Bitcoin and they were trying to lock in the premium exposure. As those things get taken off, those hedges, you are going to see Bitcoin continue to rise in value. And so my prediction is the following, that we are going to see from our 120-ish thousand mark today, we're going to run in to the end of Q3, September. Why is September? When we get close to the end of September, you're going to have the options expirations all start to happen. There will be some volatility and likely potential downside pressure. Once we get, 7 to 10 days past that period, I could easily see mid-October, up only, baby, Q4, into November and maybe December, and here we go. So what you're going to see here is you are going to see the real start of what I would consider the second half of the bull market. It's going to start sometime either at the last 2 weeks of August or the first 2 weeks of September, sometime in that 4-week period. You're going to see a run up into the options expiration. You're going to see some relief that happens around the end of September, early October, and then you're going to see a much higher leg up in second half of October, November, and maybe even into December. And then where we go from there, I think, is a very interesting conversation, because I could see two different arguments. I could see, hey, 4-year cycles don't go away. There will be these drawdowns. It will be less volatile, meaning that you're not going to get an 85% drawdown. Maybe you get something more like a 50% drawdown in the bear market. But I also could see an argument where you are going to actually watch Bitcoin continue to kind of grow at this 45-degree angle, which has been happening since the ETFs got approved. And if that is true, that means that we now have broken the 4-year cycles. We have this persistent bid, and you should see Bitcoin continue to kind of grow in value. Now, the reason why I say either or, I don't have a strong opinion about that yet. I think we need to see more data to understand how parabolic is the move in the second half of 2025. If we get a lot of kind of explosive growth and it looks more like a parabolic move, then I would expect at some point us to get overvalued, overhyped, right? There's too much frothiness, and then you'll get somewhat of a larger correction because you need to get rid of that frothiness. If we continue this kind of grind up, which is kind of crazy. If you think we were at $70,000 on November 1st last year. So we've ground from $70,000 to $120,000, $50,000 per Bitcoin increase in price in less than a year. So if we continue this grind up, then you never get the frothiness. You never get the, exuberance and enthusiasm that then would create this scenario and environment to then get a big correction. So I don't know. It's like, which way, Western man? I don't know which way yet until I see what happens in the second half this year. But the faster and higher we go up, the more that I think we'll have the 4-year cycle and we'll get the correction. If we do not see that and we just continue the grind up.
For years, Bitcoin has followed a 4-year cycle tied to the halving. Boom, bust, rinse, repeat. But what if this time is different? The rise of institutional capital via ETFs could mean that the 4-year cycle is breaking down. Instead of explosive bull runs followed by deep 85% drawdowns, Pompliano says we might start seeing shallower corrections, maybe 50% or less. Alternatively, we could just be midway through a parabolic cycle, which will end in frothy overvaluation and a deeper pullback.
Part of the reason that people got the tariffs wrong is because they were looking at it in a silo. The academic view of a tariff is if you increase the amount that it is for someone to bring their product into the US, then the person in the US who is selling that product is going to increase their price, which then will create inflation. But as people now are learning, you can't evaluate a single policy in a silo. There's the world. It's a complex economic machine. So for example, if you went back and you looked at the China tariffs, what you saw was actually there was only a 4% increase in the price of Chinese goods in America back in 2018. Why was that? The tariff was like 25% or something, right? Well, what happened? All these different people along the supply chain ate a piece of the tariff, so the end consumer was only 4%. So the second you realize that, you say, oh, this isn't an academic exercise, this is a real world analysis. And so the same thing then starts to say, well, what if consumers shift their behavior? What happens if interest rates are moving at the same time? What happens if they're printing money? What happens if there is some sort of technology advancement that actually brings down the cost of the product, even though there is a tariff? Let's say TV prices are crashing, but there's a tariff in place. What if the demand for solar panels is so exponential that people aren't going to stop buying the solar panels regardless of what the tariff is? And then all of a sudden the next president comes in and he changes the tariff on Chinese made solar panels from 25% to 50%, right? It's a big complex economic machine. So go to Bitcoin. There's not one single indicator. You can't just look at money supply. You can't just look at interest rates. You can't just look at, let's say, a hash rate. You can't just look at OTC or exchange, number of Bitcoin available. You can't just look at social enthusiasm and like the social chatter. All of these things are data points. And part of what makes it difficult to be an investor in a very dynamic world like Bitcoin is if you are going to try to choose when to buy or sell, then you are going to have to constantly take in all these data points, synthesize them, and make decisions. It's very, very difficult.
Pompliano ends with a broader reminder: the macroeconomy is not an academic equation. You can't view tariffs, interest rates, or monetary policy in isolation. Everything is connected. Tariffs don't automatically create inflation. Interest rate cuts don't immediately cause asset bubbles. Behavioral changes, supply chain responses, technological innovation, and geopolitical shifts all interact in complex, unpredictable ways.